Hello, everyone, and welcome back to another exciting, hopefully, it's exciting for all of you, episode of the David Hittle Real Estate Show. Today is Sunday, May 9th. Happy Mother's Day to all of the mothers out there, all of the grandmothers out there, all the great grandmothers out there. Happy Mother's Day to one and all, and welcome. And I thank you for spending some time today with me on this Mother's Day, an important day for mothers. I'm not a mother, obviously, so I thank you for spending a little bit of time on this Mother's Day with me. If you enjoy anything real estate, if you want to know anything about real estate at all, want to learn about real estate, just be up to date on the market, please click that subscribe button down there in the lower right hand corner of the screen. That lets me know that I have a following. You can also click the thumbs up button. That'll give me a like, which I can see while I'm doing the live. But if that is not enough, we will be discussing today why waiting to buy a home could cost you a small fortune. We will also talk about the magic and the power of a pre-approval letter. But before I get started, my name is David Hittle. I am a realtor with United Real Estate Louisville, and I thank you all for watching today. If you need to get a hold of me, have any type of question, comment about the show, you can put your comments in the comment section here in the live chat if you wish, or you can contact me. All of my contact information is in the description of every video. But let's get started. So why today, why not buying a home now could cost you a small fortune? So, of course, if you are thinking of buying a home and you're just not to the point where you're ready to jump, you are not alone. Many people are sitting on the fence trying to decide whether or not buying a home now is the right option. Some of these people are renters. They have a strong desire, a strong passion to own a home, to become homeowners, but they are unsure whether buying now makes sense. And that's where I come in. I'm here to try to tell you, give you all the facts. All the facts. That is my only job, is to give you the facts, give you the information, and you can plug that into your own algorithm to determine whether or not now is the time for you. And when that time is right for you, then I'm here again to walk you down that path. I'm not here to pressure you. I'm not here to push you at all. I'm not a car salesman. That's not what I do. I'm here to teach, and then I'm here to walk beside you down this path and through this process, because it can be a stressful, difficult process. And I'm here to take as much stress off your shoulders and put it onto my own shoulders as I possibly can. So in order to determine if you should buy a home now or wait another year, you should ask yourself these two simple questions. Number one, do I think home values will be higher a year from now? And scratch two questions. I'm going to give you three simple questions. Three. So number one is, do you think home values will be higher a year from now? That's number one. Number two, do I think mortgage rates will be higher a year from now than they are now? And number three, am I financially ready to buy a home? Am I financially ready? Because I don't care if home values go up, mortgage rates go up, if you're not financially ready. So if you're thinking about buying a home, then I want you to be financially ready. I don't want you taking on a debt burden that you cannot handle. That doesn't make me feel good in my heart, and it leaves you in a very poopy or very crappy situation. So number one, do you think home values will go up, will be higher a year from now? Two, do you think mortgage rates will be higher a year from now? And number three, am I financially ready to buy a home, whether or not home prices are going to go up or mortgage rates are going to go up? So let's shed some light on those first two questions, and then I'm going to get to the third question, which I believe is most important. All right. So where will prices be a year from now? So the projections from the experts on average are showing a price increase of 7.7%. 7.7%. So last year, here in Louisville alone, we had a 9% increase. So if you owned a home last year, going into this year, from January of last year to January of this year, on average, you saw a 9% increase in your home's value. The projections are 7.7% for this year. So they gave the example of a $325,000 down payment, or $3,200. They will end up borrowing $292,000. Applying the projected rate of home appreciation, that same house will cost $350,000 next year. And with a 10% down payment of $35,003, they'd then have to borrow $315,000. So in that example, with the 10% down payment on a $325,000 house, today you would borrow $292,500, and by next year, that same $325,000 house is going to cost you about $350,000, meaning you're going to have to borrow $315,000. So therefore, as a result of just home prices alone rising, a prospective buyer will have to put down an additional $2,500 and borrow an additional $22,000 just for waiting a year to make their move. Okay, that's number one. So home prices are expected to rise. 7.7% is the average projection by the experts. Where will mortgage rates be a year from now? Okay, that's another question. So the experts are projecting 3.3% this year. That's what the experts are projecting. Right now, our rates are hovering just under 3%. I think the last number I saw was 2.97, a great rate. Freddie Mac, one of the big government loan companies, is projecting an increase by the end of this year of 3.5%. Fannie Mae, another government lender, 3.5%. The National Association of Realtors projecting 3.5%. Mortgage Bankers Association is projecting 3.9%. So the average of those projections today is 3.6%. That is what they are forecasting will be the average for this year. So a home buyer will pay a lot more in mortgage payments each month if both of these variables increase. If your home value increases and your mortgage rate increases, you will have to pay more for your home. So looking at that same home, assuming a $325,000 home, this year with a 30-year fixed rate mortgage at 3%, after making it 10% down payment, your monthly principal and interest payment would be $1,200. That same house 1 year from now could be $350,000, and the mortgage rate could be 3.6%. The principal and interest on that after putting down your 10% totals $1,400. So you're looking at potentially last year versus or this year versus next year, a $200 increase in your mortgage payment. However, none of that matters a hill of beans if you are not financially ready to buy a home. And what do I mean by being financially ready to buy a home? Well, I will give you those figures. You are financially ready to purchase a home when you can put down enough to make it worth it for you. Don't purchase a home just because it's the thing to do. Don't purchase a home because it is the hip and happening thing. Don't buy one because all of your friends are buying one. You need to be financially ready to purchase a home. The experts say your home mortgage should not cost you more than half of your income. If it's going to cost you, if your monthly payment is going to cost you more than half of your income, then you shouldn't be buying a home. You should not. You should wait until you can get that number down. Buying a home that's more than half of your income puts you in a dangerous position. What if something happens? What if a medical bill pops up? You should also have emergency funds. You should have an emergency fund available so that if one of those things comes up, you're not racking up more debt to pay for it. You should also consider putting down 20% towards your down payment. A 20% down payment will eliminate PMI. PMI is your property mortgage insurance. That can be anywhere from 0.22% to 2.2% of your mortgage. That could be a lot of money. So and you pay that every month. So if you're able to eliminate something that doesn't help you, it only helps the mortgage company, it only helps the lender. If you can afford to put down a 20% down payment, that eliminates a layer or a payment that you're going to make that could be unnecessary. Okay? So those two things make you know whether you are ready to purchase a home. I'm not a financial advisor. I'm just a realtor. My job is to help you in the purchase of your home and to help you in the sale of your home. But when I take on a client, I want that client to ultimately be a friend. I want that client to ultimately consider me part of their friend circle. So if I sell a home to someone or I get them into a home that's way above their means, then that might exclude me from the friend circle. And that's not something I want either. And it may actually put my client in a bad position. And no one wants that. So make sure that you are financially prepared for the home ownership journey and for home ownership. Because if you're not, then you should wait. So it doesn't matter. It shouldn't matter to you whether or not home prices are going up or whether or not mortgage interest rates are going up if you don't have the financial ability to own a home. Okay? That's just my 2 cents. You can do with what you want. But now we're going to talk about the power of a mortgage pre-approval. So what is a pre-approval? First off, a pre-approval, a mortgage pre-approval, is a letter that you receive from your lender or from your bank or from your mortgage company, from a mortgage company, that says after they have reviewed your finances, they have determined how much you are qualified to borrow. Does this mean you need to borrow that amount of money? No, not at all. Don't purchase above your means. Don't purchase a home that's going to cost you more than 50% of your income, because that could be dangerous. But a mortgage pre-approval is a letter from your lender, from the bank, that says, here is what we feel comfortable, the bank, the money people, what they feel comfortable loaning you towards your next home. The factors that that impact this are your income, of course, your debt, how much assets you have, your credit history, and your employment. Normally, to get a pre-approval, you'll need 2 years of W-2s, 2 years of tax returns, your 2 most recent pay stubs, and an identification. Those things can get you pre-approved. But it all really depends on your income, your debt, how much assets you have, your credit score, and employment. Those things are the things that are factored into how much the bank, how much your lender is willing to give you. The benefits of pre-approval is it gives you clarity when determining your home buying budget. So say you bring in $3,000 a month. Say you bring in $3,000 a month. So if you're thinking wisely, you don't want to spend more than $1,500 a month on your mortgage, on your home, because you want to be in a good situation and you want to keep savings, and you want to have investment, and you want to be able to feel confident in your home purchase. So you would not want, if you bring in $3,000 a month, you don't want to spend out more than $1,500 a month for your home. So that helps you to figure out what your home buying budget is. Your lender may say, yeah, you qualify for $1 million. We'll give you $1 million towards your next home. But do you necessarily want to take on $1 million home budget? That's huge. Do not overspend on your home, and do not overwhelm yourself with a monthly mortgage payment. A benefit of pre-approval is also that your offer is more desirable and has a competitive edge in a bidding war. So knowing that you are pre-approved will help your offer. It may push your offer above another offer because the seller has confidence that you can afford what they're asking or what you're offering. And finally, you can be more confident in your ability to secure a loan. A pre-approval doesn't mean that you are qualified for a loan. There's other paperwork that comes after that. But the pre-approval gives you more confidence. So I hope all of this has been helpful. I don't want to take up too much more of your time on this Mother's Day. You should spend this time with your mother, the mothers in your life. But I do want you to know that buying a home is a big deal. It's maybe the biggest investment that you will ever make. It is a great investment. But I, as a realtor, I, as your friend, do not want you to get in over your head. And you can easily do that if you jump into something before you're absolutely financially ready. If you need my help as a realtor, I am here to help. I would love to help you find your next home. I would love to help you in your current home. If you're looking to sell that home, I would love to help. Anywhere in the world, anywhere in this country, I can help. I have that huge referral network. If you need a realtor anywhere in the country, anywhere in the world, let me know. I will make sure that you are partnered with someone like me who can walk you through this. Okay? So for me, for United Real Estate Louisville, I thank you for taking this time today to watch on Mother's Day. Go spend some time with your mother today, or your mother figures in your life. I hope you have a great Mother's Day. Have a great week, and I'll see you next week. This is David Hittle with the David Hittle Real Estate Show, United Real Estate Louisville. I thank you for watching.